Last week, equity markets wavered, but remained near all-time highs, as investors weighed a complicated mix of risks and opportunities. On one hand, geopolitical tensions intensified, energy prices rebounded, and questions around the AI trade in general resurfaced. But on the other hand, strong earnings fundamentals and continued enthusiasm around artificial intelligence in general helped to support market sentiment. Inflation came in even softer than expected for June, with falling gasoline prices pulling the consumer price index lower for the month, a trend we see as fleeting, given that global energy prices are back on the rise. Meanwhile, second quarter earnings season kicked off on a strong note, with large banks and financial institutions broadly outperforming expectations, driven by robust growth in market trading and capital markets activity. With little major economic data on the calendar this week, and with Federal Reserve officials in their pre-meeting communications blackout period, investor attention will shift squarely to corporate earnings. Nearly 100 S&P 500 companies, representing about 18% of the index's total market capitalization, are scheduled to report earnings this week, with Wednesday shaping up as the most important day. Earnings growth has arguably been the defining driver of equity markets this year, as companies and the professional analysts that follow them have continued to mark their profit and margin expectations higher and higher. And on Wednesday, we'll see whether this pattern holds for two mega-cap technology companies. We'll be watching capital spending plans closely as AI-related investment continues to accelerate at a remarkable pace. We'll also be focused on the economics of the AI build-out itself, including how computer chip pricing and availability are influencing revenue growth and profit margins. Even beyond technology, the bar has been set very high for companies to deliver. Beating estimates has become commonplace, but with valuations already reflecting considerable optimism, companies that fall short may face an outsized market reaction. Geopolitical risk is back on the table. Oil and energy prices have moved higher after declining sharply in the weeks following the Middle East ceasefire agreement. At the same time, inventories across the domestic supply chain remain very low, a factor that can have an important influence on gasoline and diesel prices and ultimately the inflation outlook. So the two things we're watching closely this week: second quarter earnings season, particularly among large technology companies and AI-related businesses, and two, geopolitical developments and energy prices, which could have implications for both inflation and broader market sentiment.
The views expressed are solely those of the authors and do not necessarily reflect the views of First Citizens Bank and Trust Company or any of its affiliates. This material is for informational purposes only and is not intended to be an offer, recommendation, or solicitation to purchase or sell a specific investment strategy, any security, or insurance product, and should not be construed as legal, tax, or accounting advice. Please consult with your legal or tax advisor regarding the particular facts and circumstances of your situation prior to making any financial decision. While we believe that the information presented is from reliable sources, we do not represent, warrant, or guarantee that it is accurate or complete. Many companies referenced in this content are independent third parties and are not affiliated with First Citizens Bank and Trust Company. All third-party trademarks referenced, including logos, trade names, service marks, and icons, remain the property of their respective owners. Your investments in securities and insurance products and services are not insured by the FDIC or any other federal government agency and may lose value. They are not deposits or other obligations of or guaranteed by any bank or bank affiliate and are subject to investment risks, including possible loss of the principal amounts invested. Past performance is no guarantee of future results. Estimates of future performance are based on assumptions that may not be realized. This material is not a solicitation of any offer to buy or sell any security or other financial instrument or to participate in any trading strategy. Diversification does not guarantee a profit or protect against loss in a declining financial market. First Citizens Wealth is a marketing brand of First Citizens Bancshares Incorporated, a bank holding company. The following affiliates of First Citizens Bancshares Incorporated are the entities through which First Citizens Wealth products are offered. Brokerage products and services are offered through First Citizens Investor Services Incorporated, FCIS, a registered broker-dealer, member FINRA, and SIPC. Advisory services are offered through First Citizens Investor Services Incorporated, First Citizens Asset Management Incorporated, and SVB Wealth LLC, all SEC-registered investment advisors. Certain brokerage and advisory products and services may not be available from all investment professionals, in all jurisdictions, or to all investors. Insurance products and insurance are offered through First Citizens Investor Services Incorporated, a licensed insurance agency. Banking, lending, trust products and services, and certain insurance products and services are offered by First Citizens Bank and Trust Company, member FDIC, and an equal housing lender and First Citizens Delaware Trust Company. For more information about First Citizens Bancshares Incorporated, its subsidiaries, and its investment professionals, visit www.firstcitizens.com/wealth/disclosures.